Welcome everyone to my video. Today this one is going to be a bit different because I will be showing you the easiest ICT strategy that I personally use to make you pass your first ever funded account and get your first ever payout. Okay, so let's just get straight into it. Okay, so this is the 8:30 a.m. London candle setup. Okay, so the first thing you need to do on the 15-minute chart, and you need to locate the candle that formed at 8:30 a.m. This is, I'm using London time, so you can just convert it to wherever you want. I'll have a link in the description for a converter. Okay, anyway, you need to observe the next candle closely to see whether it takes out the highs or the lows of this 8:30 a.m. candle. You can see right here I have the highs marked out and I have the lows marked out. Okay, so why is this actually important? The highs and the lows of 8:30 a.m. candle often act as a liquidity zone. So when price takes out any of these levels, is a strong indication of where the market is headed. Let me explain more about this. So if the highs get taken out, there will be more bias towards the downside. So if the downside gets taken out, there will be more bias towards the upside. All right. So we need to identify the market bias. Is it bullish or bearish? Once the next candle has actually broken through the highs or the lows of the candle, then the next step, what we need to do is find if the candle breaks the highs, we're looking at bearish. If the candle breaks the lows, we're looking at bullish. In this occasion, the candle actually broke the highs, which means we're aiming low. Okay. So once we actually found that out and figured out the bias, what we need to do is change our time frame. All of that was on the 15-minute time frame. Now we're on the 5-minute time frame. Okay. So if the highs were taken out, we need to switch to the 5-minute time frame and wait for a bearish engulfing candlestick. That is the next move. A bearish engulfing candlestick. What is a bearish engulfing candlestick? It's a stick pattern where there's a large bearish candle completely engulfs the previous one, which means this most recent candle is actually way bigger than the one before it. Okay, this is probably not the best example, but you can see right here, this is a bullish engulfing candlestick. It's very big, and it's so much bigger compared to the size of the one before it. Okay, this is very important because it shows us that the sellers have actually stepped in, and this will actually get us ready to trigger and to prepare for our entry. You can see right here, this is the engulfing candlestick. Next, we need to find a market structure shift. Okay, in this bearish scenario, we look for a breakdown of the higher lows, which you can see right here. This is the higher low right there. And what we need to do is actually look for a breakage of these lower highs. All right, and this signals us that the sellers are actually losing control and the buyers are stepping in. Okay, why is this important? The market structure shift gives us confirmation that the reversal is actually real and is genuine, and it takes out any other chances that it won't work or that we won't be catching the trade. So you can see right here we've got the market structure shift. We'll go to the next example, to the next slide. Sorry. Now all we need to do is find the fair value gap entry. Okay, once we found out the engulfing candlestick and the market structure shift, everything, what we need to do now is find out the fair value gap. All right, why is this fair value gap very important? This fair value gap, or inefficiency or imbalance, all these mean the same thing. They show us where price is most likely to retrace. Okay, this gives us the perfect opportunity to enter the trade with minimal risk. Okay, so we need to place our entry at the fair value gap and set the stop loss just above the high of the 8:30 a.m. candle, and take profit. We put it at 1 to 2.5 or 1 to 3. Okay, you can see right here, it's gone, retouched into this area of the fair value gap, and it's completely smashed take profit. Okay, but there's also some mistakes that you need to avoid while using the strategy. Just before we continue with the video, I just want to show you something really quickly. Okay, so there's lots of people that are actually offering fast pass service, and they're going to pass your challenge phase 1 and phase 2, but what does that actually do? It doesn't do anything. It doesn't get us the money. Okay, I actually offer payouts. Okay, I will get you your first ever payout, making you thousands and thousands of dollars. You can see Nicholas here has been working with me a lot. He just got in his 8K payout right there, and you can see Caleb right here got a 7K payout. You can see Joel, who made a 3K payout also. See, so there's lots and lots of people actually getting payouts with me. And also, traders takes 1 to 3 months to pass their first ever challenge and get a payout. First ever time. 1 to 3 months. That is such a long time. And also, don't forget that 95% of traders actually do not pass and they just fail and lose their challenge. Okay, I will get you your first ever payout within 2 weeks, and if I don't get you that, I will literally personally give you $1,000, and you can quote me on this on my YouTube channel. Okay, and if we don't get it, we give you $1,000 and we work with you until you get that payout. Okay, we're only after results here, and this is the only thing we're gonna give you. Spaces are running out really, really fast because this is a very hard and dedicated service to our clients. So make sure you actually do get involved as quick as you possible. Okay, we're opening 5 more places, so make sure you click the first link in the description to get your first ever payout with us within literally 2 weeks. All right, but anyway, let's continue with the video. Don't enter too early and always wait for the bullish/bearish engulfing candle to form. Okay, also do not ignore the risk to reward ratio. Okay, I know it can be greedy, but you need to stick to the 1 to 2.5 to 1 to 3 and stay disciplined. Okay, make sure you don't overtrade. Also focus on the key time, 8:30, for optimal market conditions. Okay, overtrading outside this strategy can like lead to really, really bad losses, and I don't want that happening to you. But let me just show you on a chart example right now. So now that we're on the real charts, I'm going to be showing you exactly how this plays out in live form. Okay, so, but first I have this strategy in a whole PDF form if you didn't understand the slideshow that I showed you. And if you want this, just message me and I'll give it to you, or put PDF in the comments and I'll just send it straight to you. But anyways, so what we need to do first is mark out the highs right here and mark out the lows of the candle. Okay, so the highs and the lows of the candle are completely marked out. What we need to do next, play price forward. You can see that the highs have actually just been swept. So we can remove this here. So the highs have been swept, and now we drop down to the 5-minute time frame straight away. You can see the highs are right there and it's just completely been swept. So all we got to do, play price forward until we find a bearish engulfing candlestick. Okay, so we're gonna keep going. And you can see this is actually a bearish engulfing candlestick right here, because the candle before it is very small and this one's body is very, very large. Also, we got our market structure shift, which is right there. So this can actually be quoted as our market structure shift. So now we basically have everything that we need. All we need now is our fair value gap, and then we can enter off of that straight away. Okay, so I'm going to be just looking for that right now. You can see we got a good candle right here and we got a good gap right there. Okay, so this is our fair value gap, our gap of inefficiency right here. Just going to be naming it fair value gap. Okay, so this is all we need right now. And I'm going to be entering off the 50% zone of this candle. Okay, so it'll be anywhere around here, placing my stop loss just above the candle like it is right now, and placing my take profit at a 1 to 3 risk to reward ratio. And I'm going to be showing you exactly how this runs out. You can see, play price forward. You can see it's just entered off right there. Now if I keep playing it forward, it's getting close to hitting stop loss, but it doesn't, and it's going towards the downside now. And you can see, and it's just smash take profit right there. Okay, you might not be able to see it. I'm just going to zoom in. You can see right there, smash take profit. And yeah, happy days. We just completely smashed it, and this is exactly how the strategy works. But there is actually a few more tweaks and stuff. But remember, if you actually want to get your first ever payout, making 5,000, 3,000, 2,000, whatever a price you want, you just need to join this channel right now, which will be the first link in the description, and just message me straight away. Okay, message me straight away. I'll give you the prices. I'll give you everything on how everything works, and we'll get you your first ever payout straight away. I will make you your first money, your first $1,000, your first $5,000, your first $10,000.